I'm a firm believer that you got to understand the rules of the game, and then the game is yours to be played. Property historically over the records has sort of doubled every 10 years and the rents have doubled every 20. Without having to work too hard, your money's working for you really hard. I don't agree that you have to go direct to vendor. There's very rarely we've gone direct to vendor. The only time we've gone direct to vendor is when we're doing a development and next door the guy goes, well, once you finish that, do you want to buy ours? The deals are out there, they're on the market for everybody. It's just on how you analyze it, how you see you can repurpose it, and how you can extract the most value. So many people come up, I've paid 15 grand, this mentorship and training, but I'm like, okay, how long have you done that? 2 years ago, what have you got? I've got nothing. Looking at it, you've got so many people that just keep going out there and just saying they're a millionaire. I'm like, okay, he's got these companies, but he's never filed any tax returns. However, he's charging serious amounts on courses and all the rest of it, driving around in fancy cars. Also, I find with social media, it can be a massive illusion to a lot of people, and most people get blown away by just looking at material things rather than looking at something factual. I think the people you surround yourself with is very important if you want to be successful in life. And sometimes you have to cancel some people out whether you like it or not. I think it's easy to get distracted. Just ensure that you stay in your lane. If it's something that you're passionate about, just keep working at it and you will be successful.
Hello, everybody, and welcome to another episode of Property People. Today, I'm thrilled to be joined by Mr. Malkit Purewal. How are you today?
Good, Sam. Thanks for having me.
Good. Well, I've been following you guys, Savoys, and you and your partner's journey on the social media, the ether, out in the digital space for quite some time now. You guys have been making some huge waves. Just a quick intro before we get into it all. You are the co-founder of Savoys Properties, which spans a group of companies from property development, lending, education, and a lot more. You are multi-award-winning boutique developers, creating affordable house shares as well as self-contained units, doing all kinds of stuff from house conversions into commercial conversions. You refurbish properties across the UK into very high-quality homes. And you do it with style, I must admit, because you've been doing it and catching a lot of attention from a lot of people, which we'll go into all the details of that. But before I get into all of that, I'd like to know a little bit more about you personally. I always like to go back to school. And what type of person were you at school? Did you always know that you were going to be a big property developer?
Going back to school, around that time, I think one thing is probably important to point out was at that point at school, high school, my parents ran a grocery off-license convenience store, and we used to live above the store. And I remember being at school, having to come back after school, help my parents put the stock, whatever's come in, the deliveries out, and put stuff away. I'm just like, what do I need to do to not be doing this when I'm older? So I was not really a confident person in terms of public speaker or anything like this. I did like the business element of the way my parents were running the shop, and the way you can monetize and make money. And I wanted to pursue a business route. So through A levels, my degree was in management studies. But yeah, that was the route that I wanted to go down, like the business side of it.
So your parents are entrepreneurial in the fact that they were running their own business. It was a convenience store. And living above it, you decided that this is. You're inspired by the fact that they were their own bosses.
Yep.
But not particularly that trade.
That's right. So just a little bit of background about my parents. So my parents originate from what is now called India, but prior to Second World War and independence of India in 1947, it used to be a state called Punjab. Then it came under British colonial rule. After independence, after Second World War, it was literally split in two. So Punjab, what part of it fell into what is now known as Pakistan, the rest into India. In the early 50s, it was quite difficult for my grandparents on both sides. In India, there was not really much money out there. They migrated, one set migrated to Kuala Lumpur. It didn't really work out there. And then basically the UK opened up where they wanted to rebuild. So my mother's father migrated to the UK, and then a few years later, my dad's dad moved out there. So we come from this sort of background where we literally had nothing. So My parents and my grandparents were all from a farming background. So when my parents actually came over, they're working 2, 3 jobs. They're consistently working. I was literally brought up by my grandparents because my parents were always working all the time. So I saw them going from like factory workers and my dad working manual labor on road sites and stuff to actually save up enough money to actually buy their own shop with the assistance of a mortgage. So that
Right.
was quite entrepreneurial for me. And I saw that. I'm like, okay, look, I want to step it to the next level, but I don't know how to do it. The reason we don't know how to do it, all my aunts and uncles were also doing quite low paid jobs. So we didn't really have a network access to some, big business people to sort of guide me in the way, like mentor me along that journey. So hence I thought probably the only way forward for myself was to literally just get educated at that point, which will then later see myself getting a degree and a master's, as I saw that was my way of sort of getting out of not having to work in a shop.
It was a long way. But I
Yeah.
mean, it's quite crazy that there's a common thread where adversity usually creates quite driven people to be able to kind of, I don't know, want for a better word, but dig themselves out of what is seemingly a hole. But I mean, you were in a, I mean, rags to riches story, that kind of thing, where your parents come. Like my parents also came to this country with very, very little. Kind of, I was born there actually, but I was brought up here, and they go through all sorts of adversity. So I'm very lucky that they did that for me. But it gives you, it's for some people it's a driver. For some people they use an excuse for them to go nowhere though as well.
Yeah, so being from a Punjabi background, there's a saying, it's called Chaddi Kala, and that basically translates to being always in high spirits.
Right.
So growing up, I could go to like a aunt uncle's house, and they're really poor and they don't really make much, but when you turn up, they'll put on a full course meal and with the drinks and everything, and treat it like this is the norm. But so growing up, we're always in high spirits. It's never talked about whatever's been done to us. It's just like, okay, look, we have an opportunity. You got to worry about the now, not about the past.
Sure.
So that's how, myself, and then obviously Sanjay's also from the same sort of Punjabi background. So we've always got that same mentality.
And so at school, what did you do your A levels and go to uni?
Yeah, so school, done my GCSEs. Wasn't the brightest because I was literally I came from Southall. It was the schooling wasn't that great. And I remember when I moved to high school, which moved out of area, and I had to spell like a simple word like pink, and I couldn't really spell it. And I remember writing my first day at school like PICK. There was a spelling test where they work out where you are in terms of your
Yeah.
spelling and grammar, and then put you in the appropriate classes. But I thought, okay, so I wasn't really on course to passing any GCSEs, but I put the work in to pass it, and then I passed 8 out of 9 of them, and then A levels at college. Yeah,
What did you study at A level?
A level was history and business management.
Yeah, and then you studied a business management degree as well. Where was that in South?
That was that was in Brunel University.
Same one that my sister, my wife went to, and yeah, very good university. And have you found that over the years these educational accolades have helped you out in any way?
The business side has, I would say, because it actually explored certain avenues about the entrepreneurial side. You had like live case studies, obviously the accountancy aspect. So these are all things I use sort of day to day in our business, so the property business, but I don't really use that within my career. The reason being because in the late 90s, early 2000s, there was a dot-com boom going on. Don't know if you remember, but
Yes.
everyone was in IT. So when I was getting close to finishing my degree, all the jobs were sort of IT sort of based. So I basically thought, well, let's retrain. So I did a conversion course, which was a master's in computer science at Bath University. So I passed that, and then in 2000 started working a graduate job within the IT industry.
So that's, I mean, going back to the dot-com bubble, there was a huge. It's similar to, I don't know, crypto space. I guess now there's some similarities in the kind of the craze, and now probably again there's going to be another one off the back of AI. Dot-com was everything back then, and lots of people though as well have gone on to make huge money with online businesses and tech businesses. So it's interesting that you've gone down that route, and that was kind of the trend. But you pivoted to property, which is kind of an old money way of making money.
Yeah, I'll tell you why. So I've got my first job straight out of university. And in 2001, two things happened, 9/11 and lastminute.com floated, which crashed the stock market. At that point, then the company that I was working for employed about 350 people within the building where I was. That then dwindled down to 200. So I was on a regular basis, like weekly, I was seeing people being made redundant. I was seeing grown men cry, losing their jobs. And I'm like, okay, wow, what do I need to do to not be in that situation? Then what happened, it was a weekend. I went out with Sanjay, who lived around the corner from myself. We went into town. On the way back, cab pulled outside his house first, and he jumped out. He said, why don't you come in for a beer? So I said, okay, let's do this. So I went in the house. He just went straight to bed. And I ended up sitting in the living room with Sanjay's dad. And he just randomly happened to talk about buy-to-let mortgages. He goes, Malkit, you should get into buying a property. Buy-to-let mortgages are there. They're really cheap, and the accessibility to it is there. So for the listeners that are out there, prior to buy-to-let mortgages coming out, sort of late 90s, if you wanted to buy a second home, you'd have to take a commercial mortgage. The rates were a lot higher. And it wasn't as straightforward. There was a lot of criteria and stuff that you had to go through with the banks. Following the late 90s, buy-to-let mortgages were introduced, and it became a lot easier to take a buy-to-let mortgage out. If you had the deposit, you didn't necessarily need to have a salary, because obviously the rent's going to pay for the mortgage and so on. So it was
You do
really
self-cert as well back then.
You could do self-cert. There's many things you could do which you can't do today. So that was there. So literally my head was buzzing after this. I just went home. And at that point, there was no Rightmove, Zoopla, none of those portals. I literally had to open the Gazette and the Leader, flip to the middle where you used to have the housing section, and I had a look at what houses were for sale. And I noticed one below market value house going in a local auction. I penciled it, went to have a look at it.
How did you know it was below market value?
Because when I was flicking through, I saw houses on the same road or neighboring roads.
Right.
So I remember at that time, the house was traditionally around 160K, and it said 80,000 plus guide price.
So you were like, whoa.
I'm like, wow, this is really good. And I went to have a look at it, and it was all sort of done up. And I'm like, there's got to be a catch here.
Oh, it wasn't even run down or anything?
No, it wasn't even run down. Literally, the story I found out afterwards was the woman had a business, and obviously because of what was going on in the economy in that 2001 period, her business was suffering, and she needed to sell the house that she just recently refurbished to pay off some of the debts occurred by her business. So I literally went to auction with my dad. We ended up purchasing this property at 120,000. I called 3 agents around afterwards saying, okay, well, if I was to sell this, what would I get, and what would I get for the rent? And they came in at sort of 155, 160, what we initially anticipated. I'm like, wow. At that point, I think my salary or my grad job was somewhere between 18 to 20K. And I've just basically made twice as much as that.
Yeah.
So within 12 calendar months, I ended up obviously refinancing that particular property at 85%, pulled out basically what I put in and so on, had a deposit again, and then just went again. So we bought 3 properties within that first 12 months of doing that. And then ended up sort of picking up a little property bug in terms of you wanted to continuously do it. So we just slowly, over those years, just built up a buy-to-let portfolio.
Right.
Which would then sort of lead me to wanting to do more and more within property. But that was the initial bit that actually got me into it.
Interesting. So it was kind of riding a wave, and it was off the back of an uncle of a friend. So Sanjay is your business partner now?
Yeah, he's my business partner.
So how did you two meet initially?
So we literally met on the first day of school.
Oh, wow.
Yeah, so we met on the first day of school.
Childhood sweethearts.
Yeah, he came up to me, offered me out on a fight. I'm like, okay. It was just that thing that was happening on the first day, like, okay, I'll see you after school in the park for a fight. And I just went home. I'm like, I didn't take nothing of it. And then literally over the course of weeks and months, it became good friends.
You told them, I've got a better idea. How about we
Yeah.
do business partners instead?
Well, we didn't even think of it that way. It was just literally we're just friends, and then I think because we both shared similar journeys as well in terms of the parents, and both our parents ran their own businesses, so there were quite a lot of similarities there. So we tended to sort of bond together.
Yeah, no, that's good. So you had the chemistry. Do you find that, is it fair to say that you've got a similar mindset and different skill sets? Or do you actually have the same skill sets as well, and you have to kind of compensate by hiring other people?
Our skill sets are completely different. So he's
Right.
more the talkative, going out, trying to strike deals type of person. He's more the people person. I've had to sort of learn to develop that since coming on socials. But mine is more on the analytical side. So I'm good at just analyzing, just looking, breaking stuff down, reading through. This is all property wise, but just literally reading through legal particulars and so on. And if new legislation comes in, whether it's planning or something down that line, I'll read it, try to understand it. So I've got that sort of issue where I have to understand something. So if you say, look, we're able to do this under prior approval, I want to understand what bits of it, how can you do this, and so on.
Detail.
What can't you do, and so on, which later down the line will come very useful for what we're doing, planning in day to day. And obviously, in his side, he's just more the sort of doer, trying to delegate and so on.
Yeah, no, absolutely. I think you need to have. Have you ever done wealth dynamics?
No, but I've heard of him.
Yeah, you know what? I started asking everybody because it becomes. I'm starting to grow my team as well, and it's becoming more and more important for me to think about the same mindset but different skill sets. Some people are more outgoing, some people are more introverted, some people are more analytical and data driven, some people are more kind of relationship and emotional driven, and they're naturally like that. So you have to be able to kind of compensate accordingly. And if you've got a business partner, and it's a common thread that if you've got two business partners that complement each other, it works really well. I haven't really come across, I can't think of an example right now where two of them are exactly the same and it's lasted a very long time.
No, I don't think it. I think if you were both the same, it wouldn't work. It's just basically the same as having a partner.
Yeah.
If you're both, fiery people, it's not going to work. If you're both too laid back, it's not going to work. And it's the same when it comes to business as well. So you have to have different skill sets and different elements that drive you.
Yeah.
So our goal is obviously the same in terms of what we're trying to do within business, but we've just got our different avenues on how to get there. I tend to stray a little bit more on the risk averse side. So, just looking at, okay, but this could go wrong. Okay, how are we going to mitigate against that? And whereas Sanjay, let's just go for the biggest deal. You'll be fine on the day. So, but then obviously we're combining those two together, then we find something that both parties are happy with. So I think that's helped us, especially now considering we've probably been through sort of two to three downturns. Obviously, this is probably the third downturn that we're going through. So that's allowed us to sort of stay there, not lose, shed loads of money, have a sustainable property portfolio, something that's recession proof, which is important.
Absolutely. And with the property investments that you've been doing, you've gone down the kind of design-led boutique style. What's been the driver in terms of, because some people I'm going to go down social housing and I'm going to be like no frills. Some people think that I'm just going to do the minimum standard, and some people go to the other end and say, look, I really want to create something that's quite design, something that's very Instagrammable, put it that way.
So when we were looking at doing properties, we've always done them for working professionals. We have converted buildings into flats and then provided them as social housing to some social housing providers. However, obviously the rents are a lot lower. We don't really want to be running emergency accommodation. It's just too hands-on.
Yeah.
What you tend to find with working professionals is they've got something to lose. They're working jobs. They're not always at home, so the impact in terms of wear and tear on your property is going to be lower as well. Then the other element was in 2010, we saw that working professionals, especially in the co-living space, was really a neglected space because most people were only focusing on students and social housing. There weren't really there was no spareroom.co.uk back then either. So we were sort of early adopters of this and trying to build these co-living homes. And
so this is like what year?
This is 2010.
2010, yeah.
So in 2010, we started doing this, and then obviously, I think maybe 4 or 5 years down the line, Spare Room sort of came out in its early format.
Yeah.
But then you have to also take into account social media as well, because as soon as you put something out there, someone's always got an opinion, which is okay because it actually drives us. So we use, whether it's good or negative, we look at it both. And then you want to, like, our properties are effectively our sort of art form. So we want to show them in the best possible light. We've got big lenders that are backing us. We want them to believe in us, so they'll underwrite more loans and some of the more riskier projects that we're doing. And they heavily use stuff like LinkedIn. So we want to ensure, whether they're liking it or not, they can see the work that we're putting in. And then obviously you've got the general folk, or majority of them are on Instagram, and you want to put that out there as well. So one, to just show what we're doing, but two, to inspire others as well.
So that high end was trying to be cut above the rest in the competition. Anybody that was doing it, even though that wasn't really well documented back in 2010, there wasn't. I think it was like a lot of bed sits and stuff back then. I'm not even sure there was a use class for C4.
Yeah, so C4 actually came in 2004, part of the Housing Act. So up until then, there was no terminology as house of multiple occupancy. It was just considered a bed sit.
Yeah.
But then I think because you could basically put so many people into one house, they wanted to come out with some legislation just to protect their safety and, introduce fire safety measures that everyone needs to adapt. So, which I think is perfectly okay.
Yeah.
But yeah, it was still then, there wasn't, most people was just literally just putting fire doors up, some smoke alarms, and sticking some tenants in, where we would then sort of in 2010 literally take a house back to brick, repurpose it, make them all en suite, because in our heads we would have said, well, I remember being in a shared house during university. I didn't really like it because I had to share a bathroom. You don't want to go into a bathroom when someone's had a poo afterwards. It's not the most nicest thing to do. So we made all our rooms en suite, and we were one of the early adopters. And I think now we've got probably just hit over 600 en suite rooms that we manage.
600 en-suite rooms. Wow. And that's all within your so do you manage them all yourself, or do you give them to agents?
So that basically was where Savoys came in. So in 2020 we brought everything in house.
Right.
And then we decided, well, we started paying all these fees out, we can slowly build our team. So in 2020, well, we had the idea of running with Savoys back in 2013. We actually set up a company called Savoys Estates Limited. We had 4 partners, so there was going to be myself, Sanjay, and 2 other partners. But then as soon as we started, we learned that, okay, myself and Sanjay, we don't really argue about something. We're always like, okay, this is what we need to do it. Let's just do it. We'll put the time in. I don't really charge for my time. Even till today, we haven't taken dividends or a penny out from the different ventures of Savoys. That's just there to pay the people that work with us, obviously the members of staff and the partners that we have. That just goes for that. We make our money through our own developments. So I was actually quite taken back when this first partner that we had on asked for a wage. I'm like, well, we just literally just set this up. We need to ring around, we need to get some customers and so on board. And he was like, no, well, unless you're paying me this, well, I'm not going to do anything part of this business. Well, I said, you might as well resign, because I'm not going to go to work just to pay your salary, and you're not even generating anything in, and there's no idea how you're going to do this.
What value was he proposing that he's bringing to the table?
Well, initially we just, how most of it works is you go out, you've got some people in property, and we said, well, we should club together and do something.
Yeah.
And so we agreed, and obviously myself and Sanjay actually were the ones that took action. We just set this company up. We were okay, let's go. And then it was just later when we drilled down, we realized, like, okay, not everyone's got the same mindset and the work ethic.
Yeah.
So, and then further down the line, we had someone else. So we went down to 3 partners, and the other one was just pushing back. Well, I think we'll do it next tax year. And it got to a stage where we just said, okay, you might as well leave as well. So then it was myself and Sanjay. I quit my job in end of 2017. I was still working in the city during this whole period. And I'm like, okay, let's just systemize what we have, and let's just push and do some more projects and just build up everything. And then let's just work out when we're going to go live with this company, Savoys. So in 2019, we said, okay, 1st of April 2020, we're going to go live. So all the agents and stuff that we're dealing with just told everyone it's all coming in-house. And then obviously we went into lockdown in 23rd of March 2020, and we were like, what the hell have we done? But one thing it gave us was time. With all our distractions were gone. There was no gym, there's no bars, no restaurants, no friend meetups, and so on. So say, okay, let's just push this, systemize it, make it work. And then we worked hard, made it work, and then we built our team from there.
Amazing. What an amazing story. And sometimes I think that those investors that didn't stick with you or didn't think that, like the guys that missed out on being one of the Beatles or something, it is what it is. But
It is. It was like you have to have the objective and the will and so on, the drive to want to do it. Whereas what I realized was most people want something made, ready-made. Not everyone sees the vision.
yeah,
Everyone sees the vision once it's been done. So like people say to me now, like, oh yeah, I see the vision. I'm like, well, 10 years ago you didn't see it. It's just only now that we're putting it on socials. And don't forget, we've been in property for, say, like nearly 23 years. 20 of them, no one knew who we were. Nothing was on socials, but we were still doing the work. If you worked in organizations like Allsop, CBRE, and so on, you'll know who we were. In social media-wise, no one knew who we were. So it's gone completely the other way now. So it's gone completely 360, where if you're in property, you would have probably heard of our name and like some of the stuff that we're doing, and obviously the events and so on.
Absolutely, yeah. It's the classic adage of it takes you 20 years to become an overnight success.
Yeah, I agree.
And so with everything that you're doing, I'm always conscientious about like time management. If you've got refurbishments happening or full-scale developments, and then you've got the education stuff, and then you've got lending, and then you've got the property management of the investment portfolio. With only two people, how do you personally manage your time? How do you manage your day-to-day, your week-to-week?
So day to day, like it always starts off with either school drops, school nursery drops.
How many you got
Then
kids?
gym.
How many
Yeah, I've
kids?
got two kids. So son's 9, daughter's 2. So at the moment they're off, so which is ideal. So I literally just go to gym like 6 in the morning. I'm back home sort of around 8, and then the day sort of begins from there. So if I have to drop the kids off to some play camp or something, I'll do that, and then it's literally just work. And then what we've done is focused on the bits that we are most effective and that have the most impact on our business. So this was like the deal analysis stuff and working with our contractors. The lettings and the management stuff, I've got like a complete team that looks after that
Yeah.
with the visits and so on. So I don't really get involved unless there's some issues and they give me a shout with that. The development stuff, so what we've learned along the way in our years in property is it's worth empowering people. So we've had someone that came to us, one, sort of be sort of mentored by us, and then two, wanted to do some projects with us. His name's Hardeep Tour. So he basically worked with us for a little while. We've done his first project, and then we saw the qualities within him. We said, well, actually, why don't you come on board? We'll give you an equal equity share. We'll create this new company called Savoys Developments. This was to do with all the client work that we're doing. But you look after the client, you follow the process up here. Obviously, you've got us to back you. So that's worked really well. Now, I think we're in our third trading year within that organization. The lending side, I'll give you a little insight on how that worked. There was a bank that actually got taken over, floated on the market. The directors made some money. They literally left, resigned, and they were going to start up as a startup bridging lender. As we've been working with that particular bank for quite a while, we knew the directors on a personal level. We reached out to them and said, well, actually, we're actually interested in learning about this element of it. Let's buy a share. So we bought 20% share of this new startup, put some money in. We ended up having a subsidiary company underneath where we would lend our own capital as well. So this is more for the mezzanine funding.
Right.
We knew as a developer, sometimes the lender would only lend you 70, maybe 75%, but to actually make the deal work in terms of the deposit and the build money that you have, you may need LTV at sort of 80, 85, maybe even 90 up to 100 on a development. So we had the ability to do that top up on it.
Right.
So we had this company here. We ran that in a line with the parent bridging company for 2 calendar trading years. Then COVID happened. The obviously most lenders that lend their money, they don't lend their own money. They lend maybe part of their own money,
Yeah.
and the rest is obviously leveraged from a third party source. That third party cut the lending line because obviously they were nervous what was going on. It was
Sure.
went into the unknown. So up until that point, this new bridging lender had probably lent out just shy of £20 million, and it's gone really well. But their lending line stopped, and they tried to get another lending line, but obviously during that period it didn't work. So they said, okay, the best thing to do is close this company down. So myself and Sanjay were left with our own little lending business that we had, but we were only lending to our parent company. We're like, okay, what should we do with it? So we renamed that to Savoys Lending. Spoke to our brokers, CPC Finance. So we lend some money to these guys where you may have some people maybe with a little bit of adverse credit, where someone's just got divorced, but then as a result,
Yeah.
they missed 1 or 2 payments. But if you have a look at their track record, their portfolio, they're quite sound.
Yeah.
So we'll lend something to these guys to help them out. And then we have our own clients that come to us where we're managing the build and the whole project. So we've lowered the risk of this project, but they need some lending either for the development stuff or a mezzanine loan. And we can lend this, but we can ensure that the whole project gets delivered. So in life, we're firm believers. If you want to become rich, or you literally just have to solve people's problems, and that was one problem out there for clients that were coming to us. So we're now able to solve that with the Savoys lending element of it, and I think we're probably sort of in our 3rd or 4th year of having that company.
And so, of all of these different things, do you have a favorite of all the different activities that you carry out, all the different business interests?
For us, we're developers through and through. So I love the development side of it. Once it's ready, there's no passion for it. So that's where the management team comes in. So I leave that with them. I like looking at analyzing a deal, going there, whether it's going to an auction room, trying to secure that. The thrill that you get from that is immense. But once a project's complete, it sort of dies, and you want to then start the whole process again. So yeah, development for us through and through.
And do you have any particular strategy in terms of buy and hold everything or buy and sell? Is that kind of like something that you think about?
So in 23 years, we probably only sold, I would say, 5 or less properties. And the only reason we sold them was we didn't realize how we could raise capital. So we weren't working with CPC Finance at that time, and I literally just I had a deal. We had deals where we needed access to the money within a couple of months.
Right.
And the only way we thought was to get rid of some of the lower performing assets that we had. With hindsight, if I met Carl earlier, I'd learn, okay, I can actually purchase this on a bridge, but they can take a little second charge on another property and just raise that there. But then once it's all done in 6 months, I can take that back off. But all these things I didn't realize at the time because my broker just told me we were only able to get this vanilla type of lending. But yeah, so everything is buy and hold, because if you have a look at it, property historically over the records has sort of doubled every 10 years, and the rents have doubled every 20. So without having to work too hard, your money's working for you really hard.
Yeah. I mean, that's one of the beauties of UK real estate is that in general, it's always gone in one direction, and property as an asset class, it gives you that kind of short-term income and the long-term capital growth. And are all your properties, geographically, whereabouts do you prefer? Where are you developing? What do you have a focus?
Yeah, so we're literally, obviously, myself and Sanjay have been Uxbridge based. So we typically focused on a half an hour radius of Uxbridge, driving radius. We've ventured out as far as Reading, High Wycombe. We've got a project that we're going to be doing in Basingstoke. We've got another project in Southampton for a client. But we've done projects that are quite far away. So we've did a hotel to several flat conversion in the Lake District. But that was 6.5 hours one way. So we literally had to move a team out there, put them in a home. pay for the rent on that house. That took a lot longer. But literally, what I find is it's easier to keep everything locally because then that fits in
Yeah.
with sort of the family life, your personal life, and you can visit a site and then sort of be back in 20 minutes, which is
Yeah.
ideal. I think the worst thing is when you're traveling, like 3-4 hours one way, 3-4 hours the other. Because even if you went for a viewing and it was a waste of time, you wasted 8 hours of your day. So which you can't get back. So we tend to want to keep that locally, which is now working out pretty well. But with rising prices, sort of is pushing us a little bit further out. But yeah, we'll see how that goes.
Yeah, I found the same thing as well. And when I was single, especially, it was easier for me to travel the country and chase yields or chase the deal rather than the lifestyle and what was convenient logistically. But now with a kid in tow, I've got a 2.5-year-old
Oh,
daughter.
nice.
Yeah, so it's definitely I want to go home every evening and I want to know that I've had a really solid day at work rather than kind of like you said a wasted trip because some meter guy didn't show up on that day or something. It's
Yeah,
just
that
like,
happens. It happens.
and that happens. So with the economy comes economic shifts, and we've talked about kind of COVID and other black swan events, even uncertainty in the market around things like Brexit, got wars in Ukraine, and these things are like ever present. Really, there's always if it's not one thing, it's another. How do you get comfortable with all of this noise and in the media and stuff around you?
We don't really get comfortable with it. We realize that property is typically a 10, 12-year cycle. So what you'll have is 70 to 80% of it will be a good time. Prices are on the rise, everyone's buoyant. Then you'll have that 20 to 30% where you're going to be in a decline. Prices will be shifting down. But I think the most important aspect is not to panic.
Yeah.
Because when you panic is when you make mistakes. Don't give up on a bad day because you're never going to give up on a good day. So why are you going to do it on a bad day? So our focus is, okay, look, just understand it is a cycle. Can you see your way out of this? Can you see yourself okay, your portfolio lasting over the next 2 years? If so, just stick in there because it will turn good. If you look at all the fundamentals, there's a housing shortage. Rents are going through the roof because of the housing shortage, because of measures that have been brought in by George Osborne and the Conservative government. I think the statistics are 66 rental properties are leaving the housing sector every day. So which is just going to lead to rents going one way and more demand for rental properties. Is forcing the likes of Michael Gove, the housing minister, to come out and say, look, we understand landlords have had it a bit hard. He's going to have to bring in some changes when he brings out that levelling up bill, which will make it more attractive for landlords to stay in the sector firstly, and then new entrants to come in. So I see maybe in the next few years there'll be some shifts. Maybe there'll be a shift with Section 24 as well, with that being reversed, because that's had a massive negative impact on the market. Yeah, I think there's some good times ahead.
I think that's up to everybody's hoping that might happen, and especially the ones that are hanging on for dear life, because I think they're getting annihilated now with the increased interest
Yeah.
rate costs, and they're getting taxed on their revenue, not their profit. Like now, it's as bad as it's ever going to get, I think.
That is.
So you might be absolutely right, and I think that this is also my take on it as well. Is that like the regulations and the opportunities expand and contract, and right now it's contracting. It's getting very difficult. But if you can make it through those times, then hopefully the deregulation causes a little bit of a boom, and that's when we all benefit from it. So when you're looking at development projects, I was talking to somebody very recently about returns and what are the projected returns. So the industry standard is you've got to make sure you've got 20% on GDV. However, with my role as a finance broker, I'm looking at a variety of different projects, and different developers and lenders get comfortable with maybe less than that. I've seen stuff. The tightest I've seen it is literally about 8% project profit on cost. That's a deal that is fundable according to the developer and the lender. Do you have any kind of minimum return metrics, either on your money or profit on cost on the project or on GDV?
Ideally, we want the ideal is to basically ensure that we don't really leave money tied up in the deal.
That's the
So
number one aim.
that tends to be the number one aim. The strategies that we employ ensure that we're always going to meet the rental calculations and stuff. So obviously we look at multi-unit in terms of commercial residential and then the HMO side. So with that in line, you're not going to have an issue with rental calculations. But the aim for us is to continue doing what we love. For us to be able to do that, then we need to pull basically all our money out of a deal or leave very little in a deal. So that's always the main thing. And we've been really successful with doing that. We've had some amazing deals which have won us awards at the Property Investor Awards. I can go into more detail on those, but they literally, that's the main aspect for us, to free up cash to keep investing and keep changing these defunct properties back into residential homes.
Tell us about the award that you won and why you won it. What was so exceptional about that
So
particular
we
deal?
had one where we started in lockdown 1. 1st of April, we went live with 1st of April 2020. We went live with a project in Burnham, which is in the home counties of Buckinghamshire. I remember when walking around this project, it was an office. It used to be rented to, I believe, like Liverpool Victoria Pension Fund, and people were like, "Do you know what? It's around 700K for price. You're only going to be able to get 5 units in this." And if you remember when I mentioned earlier, I'm quite analytical in terms of understanding every element of planning. I walked around this with Sanjay. I'm like, these guys are missing a massive trick. You can get 10 flats in here. If not 10, at least 8.
Wow.
So we actually purchased this site for 670. We obtained planning via prior approval for 10 flats. We utilized every aspect of this building, which many people did not know you could do. We ended up spending £500,000 on the site, all in with the build and the finance costs. Before we even started work, we had it revalued at GDV of 2.25 million.
Wow.
And when we completed this in lockdown 3, we had this at 2.5 million because of the finish and so on. And the market had risen since coming out of initial COVID
Wow.
1. So obviously we put this into the Property Investor Awards and it won Best Commercial Developer of the Year award.
Amazing.
So that's one deal that we had.
There's 1.2 of cost at 2.5 million in GDV. So you've made
Yeah.
well over £1 million, 1.3.
So we were just having the
Unbelievable.
confidence at that point. And don't forget, when we went into lockdown, no one knew what was going to happen. No one's ever been in that particular situation. People have been through downturns. I don't think anyone's been through a pandemic where the whole world is on lockdown, not just the country, the whole world. So yeah, it was just surreal. But one thing we did there was we didn't panic. We're like, okay, look, we're going to get out of this because we can't stay locked down forever. When we come out, the fundamentals, have they changed? Is there a housing shortage? Yes. Do people need places to rent? Yes. The locations that we're based, obviously we've got Heathrow Airport locally, you've got Stockley Business Park, and which is Europe's biggest business park. There's so many things that are around which are going to drive people back into the area. So we didn't panic. We went ahead, we finished it, and looking back, that's probably one of the best projects that we've done.
Yeah. I mean, to top that is by any stretch of the imagination. I'm talking about 8% of profit on cost. I mean, the profit on cost on that is through the roof. Out of interest, though, so this was 2019, 2018?
So it's 2019 that we had the whole motion going through, with this site, but it actually started 1st of April when we booked the contractors in to actually start. Literally, we started Savoys at that time, and then we started this project. So hence both quite special to us because of the timing and not giving up.
And this whole PD thing, because obviously PD has been around for quite some time. Was it? A lot of people go and say, "Oh, we can't do this anymore because it's already been done. Everybody knows about it. Vendors know about it. Agents know about it." What was it that you saw that everybody else was saying 6 units and you could get 10?
Yeah, so I'm a firm believer that you got to understand the rules of the game, and then the game is yours to be played. So with this, I understood that prior approval applies to the whole fabric of the building. So we had certain things like undercrofts, the loft space, which at that time didn't have any windows or anything in. Right. But I could bring all of that into play. I went into the loft, I had to sort of put my head down a little bit. I'm like, okay, we don't have the head height in there. However, the first floor ceiling height's quite high, so we can drop it there. Put some steels in, drop it there. All of a sudden, we've got the head height there. That's all permitted development. So, yeah, we can utilize that space, and then obviously we utilize literally anything that fell under that fabric of that building, which a lot of people didn't understand. Because when you contact your architect, what can I do? They'll just give you the easiest option. Whereas, obviously, I understood, we applied to everything. I'm like, actually, I can bring this into play. I can bring this. And I remember the architect saying to me, well, I'm not sure, Malkit, that's a grey area. Well, I said, well, the application is only £80 plus VAT, so £96. Just put the application in. If they fail it, we'll see. So what we did it as stage by stage. Applied for the 5. That was our fallback option.
Okay.
To break even. Applied for the 8, bringing the undercrofts in, and then applied for it as 10 with the loft space, and all 3 passed first time round. So we're like, okay, now we can start.
And each PD application is usually like 56 days. So you actually did wait about 6 months to make sure that you could get the
Yeah, so the first 2 we had done during the buying process, and the third one we did as soon as we completed.
And did you? I mean, people talk about creative structures and all this sort of stuff. Do you ever do like exchange and delayed completions or option agreements?
Sometimes it depends on the deal,
planning?
and it depends on the value of the deal, and also more importantly, it depends on how much you're going to get back out.
Right.
So if you have a look on our socials, most of the stuff that we do is stuff where there's prior approval. Prior approval just literally means it's permitted development, but you need to approach the council to confirm it's permitted development, and they give you 56 days. Where you do the delayed completion, subject to, is more on the new build stuff where the strategy is actually quite risky.
Yeah.
Because you could think I've checked every box and planning will fail. With prior approval, they've literally got a handful of things where, sound, environmental, and so on. And to help your case get passed, you just literally get some reports done on that. So, there's not going to get a sound test guide to confirm there's not going to be an impact on the local environment. You can get, if there's issues with parking, you can get parking assessment done to show, okay, maybe we needed 5 parking spaces, but 3 with cycle and the local transport links that's next to a train station, that will be adequate and won't have a knock-on effect on the neighboring roads and so on. So there's always a way around it. It's just you understanding what it is.
And with all of these PD rules that are coming out as well, I think there's going to be even more. I've been hearing over the last week or two, there's more kind of relaxing of certain PD rules, Class MA. Are you constantly looking for the next deal with your developers?
So, for example, like Class MA,
Yeah,
it brings elements of commercial buildings into play which traditionally may not have been applicable. So it just simplified the whole planning process, because obviously before you'd have what we were focusing, what I mentioned about the office, that would have been a B1A, office space. And in 2013, this became the prior approval, but the whole systems has changed now following COVID, where they've brought literally everything is under one class, which is Class E.
Yeah.
And then obviously you still have all the other classes that don't move into it, such as nightclubs and churches and so on. But literally, there's so many buildings that now fall into Class E, which, as long as you meet their criteria, the council have to grant you permission and you can change that into residential use.
And the Class E is kind of like changing it from a hairdresser to a restaurant to a coffee shop. But then from Class E, you can even take it to residential as well.
You can take it to residential, but I tend to find, we're doing a lot of these buildings, what I tend to find is you're better off changing the rear of that Class E building to residential, but no one really wants, a residential flat on the ground floor facing the high street.
Yeah.
You don't want your living room facing the high street. So we tend to find, we tend to keep that element commercial, and we find the demand for business rate exempt retail space is huge, and price per square foot is through the roof, because you've got so many new businesses that were created from home, from hairdressers, women doing laser, tailors and so on, that actually need a high street location, which one is affordable, they don't have to pay business rates and all the rest of it, and it's a big hit. So if you have a look on our socials, you'll see so many businesses that we've sort of taken, repurposed elements of it, but kept that shop front.
Yeah, that makes sense. I mean, it's a bit of a double-edged sword because these areas are becoming a little bit derelict in many ways because these old style shops are not really fit for purpose, and you kind of get tempted to put because the GDP per square foot generally is higher on residential. But at the same time, then you kind of ruin the streetscape if you've suddenly
Yeah.
just got doors and windows and not like nice parade of shops. But if you're creating the right type of commercial space that's fit for purpose for smaller businesses, whether it be nail salons or like the ones that you mentioned as well.
Yeah, sure. So what we found was high streets previously, maybe like 70s and before, were quite unique. You wouldn't go from one town to another and it would be exactly the same. Then what we found is bigger companies were coming in, like Next and British Home Stores and so on. And literally, if you go town to town, the shopping centers were all the same, the high streets were all the same. Now, what we're finding from our experience at Savoys is, you're getting smaller businesses coming in. So, maybe someone selling bespoke T-shirts and so on. So now, if you visit these high
Yeah.
street, you're going to go back to having that personal experience where you pick something up. Like, for example, you pick up a T-shirt. It's like, oh, where'd you get that from? Oh, I went down to High Wycombe High Street. There's a new little bespoke shop. So I think it's not a bad thing. It's a good thing. I just think that you have to be logical on how you use that space. And I'll give you one example was we took a former Nationwide, we converted that into 3 flats, but we kept a 25 square meter retail unit. That 25 square meter retail unit rented on a 10-year lease at £7,500. I think that we've got
Wow.
more per square foot if we change that to residential, and at 25 square foot, sorry, 25 square meters, it's not big enough to be residential anyway now under
Yeah.
minimum space standards. So it was a win-win, and a small business which again started from home and it was selling cars. They actually needed an office to man the phones and run their business and have like a point where clients could turn up and pick their keys and so on. That literally we resolved an issue for that startup business. So it's quite nice to see.
Absolutely. And in terms of finding these deals, because I think again a lot of people say, "Oh, you can't find these deals," or you've got to you've got to go directly to vendor and send out letters, or you only can do them in auctions, or you can only get them through commercial agents. Like, what is your favorite way of finding deals?
So all the major deals that we've done where we made the most amount of money, they're all available to everybody online. Boards are up. So if you drove past it, you would know. So I don't agree that you have to go direct to vendor. There's very rarely we've gone direct to vendor. The only time we've gone direct to vendor is when we're doing a development and next door the guy goes, well, once you finish that, do you want to buy ours?
Yeah, sure.
I haven't, we've never really put out letters through the post saying, I'll buy this and so on. So, and I tend to find people that end up coming to me, deal sources, with a direct to vendor deal. The vendor actually wants more than what it would be if it was on the open market. Because with the open market, they get feedback from the agent. Look, we've had 20 people expressed interest, 5 have booked a viewing, we have no offers, maybe we need to sort of wait a week, lower the price down and so on. So they're actually getting effective feedback. Whereas you've got a deal sourcer and they're too keen to take it on at whatever price.
Yeah.
And the numbers never really stack up. So I would just say to all the listeners that the deals are out there, they're on the market for everybody. It's just on how you analyze it, how you see you can repurpose it, and how you can extract the most value so to make that deal work. So there's no need to go direct to vendor. There's the sources that are there are more than enough.
And in terms of the education side of everything that you do, a lot of the stuff that we've been talking about is really helpful for people to know how to better navigate through finding a deal, how to add the value on a desktop and then bring it to life and then exit it and then manage it, all the different profit centers. You've moved into the education space as well to provide some of that knowledge. What's that journey been like?
Okay, so since being on social media and showcasing what we've been doing consistently for the past 3 and a bit years now, what we find is people are messaging us saying, "Can you mentor us? How do I do this?" We don't want to go into the mentoring side of the business. I tend to find that you have two types of people. You have mentors and educators. I mentor people that say I know and part of the team or like friends, just guide them along the way. If you're paying money for it, I tend to find that you're an educator rather than a mentor.
Right.
So I wanted to stray away from that, and that was also from advice from our brokers and lenders themselves. Don't like people paying for mentorship, and obviously we've got bigger plans with what we want to do, and we don't want to upset those guys. However, I think it's important that we talk about and showcase our experience. So what we're trying to do is only focus on the elements that we specialize in, what we've done in our 20 plus years. I tend to find from doing our events and just meeting people in general, so many people come up, I've paid 15 grand, 20 grand for this mentorship and training, but I'm like, okay, how long have you done that? 2 years ago, what have you got? I've got nothing. I'm like, okay, let's disrupt the market. Let's give back. We don't need to make money from the education side, so we can run some courses that are online from maybe £200 to £500 for a sort of day, 8-hour course. And then we can build like a 12-week course where there's a lot of information in there. It's interactive, it's unique. We create it on our own platform. We've got like a virtual tour where you can walk around the site before it's done, then go around it halfway through, and then go around it once it's complete. So something that isn't available on the market. And again, provide this for a low monetary value, but a high take-home value in terms of the experience and the knowledge that you're going to get. So that was available initially going to be around $999, and then it'll go up to sort of £1,500. But that's basically where we're sort of focused at, because we want to provide value to people.
Yeah.
Because I find there's too many people that are paying tens of thousands of pounds, and when you speak to them and then you see the knowledge that they've actually got through that period, and it doesn't resonate to me for £20,000.
Because there's only so much you can learn from a desktop or from a classroom, and so spending tens and £20,000, you're probably best just going out and buying a two up, two down up north.
Yeah, I think so.
And then start doing it up and learning on the job.
Exactly. So this is our thing. So we've got people that want some experience and they can see what we're doing. And obviously, we have never done three things. One's mentoring for money, two is joint ventures with people, and three is borrow money from individuals to push into our business. So there's three things that we haven't done. The reason we've been able to do it successfully is we find our way where we can pull out all our money plus more out of deals.
Yeah, yeah.
And that's the bit that we want to teach people and provide it at a reasonable amount to them. So we've also applied to be part of the Property Investor Bureau, which is a self-regulation board for educators that are out there. So just make sure if we're doing something, we're doing it the right way. Don't push and, try to do too much too quick. So I think we're probably going live at the end of this month with our 12-week course. Our crash course has gone live a couple of months ago. So everything's slow. We'll take the feedback from the people that are actually doing the course and just build this. And the education side to us is like a 10-year plan. So we don't expect to go hard and so on with it. It's just there. There's no overselling on our courses either. So, and there's no upselling either. So, okay, now you need to do this. You now need to sign up with a year's mastermind or whatever with us. It's just basically to provide real value to individuals out there.
Yeah, no, I think it's super important that people that are a few steps or many steps ahead even of other people to be able to give back. And of course, you set up a platform. It's not a charity as well, so you've got to obviously charge for it, but you charge at a reasonable rate so it's accessible to more people.
That's right.
And it changes the game, because there's a lot of people out there that probably think of education as a quick buck and charge way too much and don't get the value.
The other thing that sort of disappoints me out there, obviously we love the industry and we've been in it for so long, but obviously we haven't been on social media for that much time. But looking at it, you've got so many people that just keep going out there and just saying they're a millionaire. I'm like, okay, who's this guy? Little buddy, he's a millionaire. And I'm like, okay, let's just go on company's house. I'm like, okay, he's got these companies, but he's never filed any tax returns for them. However, he's charging serious amounts on courses and all the rest of it, driving around in fancy cars. and so on. But little buddy doesn't really look like a millionaire in the formats that you would if you were looking up other successful business people. So I find with social media, it can be a massive illusion to a lot of people, and most people get blown away by just looking at material things rather than looking at something factual.
You can always go and rent a Lambo for a day.
Yeah, you can, and just someone and go to Dubai and be on a yacht, all the rest of it. Those are things that you can do. And there's like with myself and Sanjay, there's a few things that we've never done. You know, posing with our car and just saying this is financial freedom for us. You know, we want to be completely the opposite way. You want to show honesty, integrity, you know, the hard work, and like obviously the family aspect, and embody all of that into who we are and what we're showing with Savoys. So again, we're going with the opposite direction of the flow.
And having a lot of fun at the same time, because your parties and events are, I call them parties rather than events, because
Yeah.
they don't come across the conventional kind of sit in a row, have a speaker at the front, that kind of traditional format. You've gone for something a little bit more extravagant.
Yeah, so I'll take you back. So 2019, like myself and Sanjay were, okay, do you know what? For years, 20 odd years, we haven't really gone out. Like maybe we're missing something. Everyone's talking about networking. I'm like, okay, we got this far without any of that distraction. Let's go out there. And I remember it was towards the end of 2019, and we're sitting in some hotel conference room, as you do with this networking event. We paid £35 each, and you've got two um, how should I say, reputable speakers. It's people that said, I've been in the industry, I'm like XYZ within the industry. I'm okay, let's just hear what they've got to say. So the first speaker comes up for 45 minutes and he's literally just going through on new changes and his course. And then he literally just pitches his course hard at the end saying, you know, it's normally this price, you can have it today if you sign up using this code at something 997 or whatever. I'm like, okay, well, maybe the next speaker's gonna be good. The next speaker comes up and he literally does the same thing after 45 minutes. And I'm just like banging my head. I go, I haven't actually taken any nuggets of information from this because they're literally just saying there's some planning changes out there, which we know, fine. But there's not been one nugget you can actually take away saying, I can now go home and implement this.
Yeah.
And then we went to the bar afterwards, and then standing around the bar, then you get to speak to some other investors and so on. I'm like, the next day, then we recapped. Actually, do you know what? I didn't really like this networking malarkey because it's literally someone setting it up. They want to get funds for doing it. It's a little income. But the speakers that are going to turn up, they're saying, well, I'm only turning up if I can pitch my course. So it's not really networking. But actually, do you know what? When we were at the bar, just talking to people there, that was the actual most fun bit. We didn't actually need to pay because it's just the hotel bar. We said, okay, why don't we just do our own event? It's a one-off event. Let's make it unique because everyone does it in a hotel. Let's take it to somewhere we will never have a property event. Make sure there's no selling. You know, there's no real formalities. We may do some speech just to say, you know, thank you for coming and so on. But there's no push and where you're getting bored. So we reached out to Watches of Switzerland flagship store in Knightsbridge. We said, okay, look, you know, this is who we are and so on. Can we do this event? So in February 21, we held our first Savoys event. And we invited just some people from social media, people that we've been working with, some business people and so on to this event. And it was literally just a one-off. Once it was done, we obviously put it on socials, showing it. We had so many people messaging us, oh my God, what is this? Can I come to the next one? And then afterwards, we're like, Sanj, you want to do another one? He goes, okay. So we're like, okay, so let's call that Q1, then we'll do Q2 and so on. So the next one we had at UK's biggest supercar showroom. So they've got a bunch of fun vehicles there if you're into cars, and it just sort of grown from there. So the first year we did it at Watches of Switzerland, GV London, Watford Football Club, Saracens Rugby Ground. So we collaborated with those brands, and then obviously we're in our second year now, going again.
And I mean, they are great, and like lots of people say great things about them. And you mentioned Watford Football Club as well. You're sponsors of Watford Football Club. Why did you decide that was a good idea?
I'm not sure it was a good idea in terms of business. It was more to do with the fact, obviously, myself and Sanjay got sons, and at that time, my son was 7 years old, and Sanjay's would have been about 5. And we were just looking at football. I'm like, there's no representative of myself in football. So obviously, football's quite black and white. You've got some Oriental players. There's no real, Asian people within it. And it'll be nice to show our kids where you can actually be affiliated to a club. So I remember Watford had just got promoted to the Premier League, and we're like, okay, let's just reach out to a few of these clubs that are local to us about us collaborating with them in some sort of partnership, sponsorship, so on. So we reached out to a few. Watford seemed to be the most reflective of us in terms of it was like a families orientated club. The people were friendly. The people that we were speaking to, and now working with. So we're like, okay, let's just do this. So for us, it was quite big. So we brought our families down and stuff, and obviously we had our logo and done the shirt picture stuff. But then it was literally supposed to be a one-off. But now we're in our third year now with Watford. But it was just to sort of inspire the next generation, being our kids. But then what we found by doing that is also inspiring other people that have approached us at our events or on the street if we bumped into them. So it's something that we want to continue. And obviously Watford got relegated. But I think in life, it's not about, the ups and downs. It's about sticking with someone during that period. So they asked, are you going to stick with us? We said, yeah, look, we're with you now. So now we're in our third year.
So you better get it back up to the Premier League.
Yeah, I think they just sort of missed out of playoffs last year, but they started off last week pretty good with a 4-0 win. So hopefully it continues, and next year we'll be back in the Premier League.
So you're Watford fan now?
Yeah, well, I'm a Liverpool fan, but Watford in terms of even when we had our convenience store back then, I remember we used to sell some, I don't know what they were, like raffle tickets or scratch cards for Watford back then. And they used to then give the store like a bunch of free tickets to attend games. But obviously, with our parents always working, there was not an option to attend. So there's always been an affiliation with Watford, and it's only like 15 to 20 minutes away from my house, depending on traffic. So, it's a local club, and I think it's important to support local teams.
And another recent accolade that you've managed to secure is being a judge in the Property Investor Awards. How does it feel to go from being somebody that is being judged and an award winner to now being on the judging panel?
No, it's amazing. So for us, I think the Property Investor Awards were quite crucial because both myself and Sanjay didn't really want to put ourselves out. We were doing the Savoys Instagram, we want a great deal of followers at that time, but just showing what we're doing day to day. When the awards came out, obviously they put our pictures out. So, okay, now they tagged us, we'll reshared it on our stories. So obviously people knew who the people behind Savoys were. So it's something that we've embraced, but then by embracing it, it's allowed us to explore other avenues where, whether it's some collaborations, obviously being here today, we got invited to the House of Lords, to some film reading last month. It just so many opportunities come from being on socials. Even after our podcast, I'm meeting some footballers, agents about collaborating with our next event, and these all from being on socials. So you don't realize the power of it. So Property Investor Boards encouraged us to put our faces out there, and obviously now you see like reels and so on, and that is as a direct result of that. Being on the Property Investor Awards as a judge, is an honor because obviously now we can give back and judge other candidates fairly, and hopefully celebrating their success later on this year.
Yeah, no, I think it's a great to be asked to be doing something like that, because obviously you put yourself in a vulnerable position where you can be judged. But everything that you guys have been doing, it's like the Midas touch right now, because you've managed to create great education programs, really, really good events, great property portfolio and developments. So it's you're on a great trajectory at the minute.
Oh, thank you.
The quick fire few questions. What is the best advice you've ever had?
Well, the best advice probably from Sanjay's dad in terms of, go out there and buy a property, which obviously we did. And that's now led to me sitting here today and obviously being financially free from work and being able to do the things that are passionate for myself and my family.
And what's the worst advice you've ever had?
The worst advice was actually before I actually spoke to Sanjay's dad, I was looking at buying a property. I got my job and I realized I can get times X against my salary. And I went to have a look at a house and I took a different friend, not Sanjay, another one. And I remember him saying, no, don't buy it. The economy is going to crash. It's going to be this and so on. And that is something that I was looking at, sort of 120,000, which is probably worth today around 600K. And that's sort of 23 years on. So it's the thing is, I think in life, if you surround yourself with 4 gym people, you'll be the 5th gym person. If you surround yourself with 4 alcoholics, you'll be the 5th. So I think the people you surround yourself with is very important if you want to be successful in life. And sometimes you have to cancel some people out, whether you like it or not.
I couldn't agree with you more. And in terms of property professionals, you remind me actually of a conversation that the type of person that when I had conversations with an old manager of mine who's now a business partner, we always just talk about there's loads of property professionals out there that don't go to these circuits and everything. They're not on these networking events, but they're just doing really well. They've got big portfolios. We used to be estate agents, and he still is a estate agent. And we used to do a lot of deals for these developers, and they're building portfolios, but they're kind of like under the radar. They don't really rise into the social media stratosphere. So the world of property online is this is like the tip of the iceberg is what you see really, because there's loads of people like from where you guys have come from that have been doing it for 20 years and being really successful at it. But now we've got all these kind of platforms and this podcast where the message can get out there so that other people can hopefully also benefit from the wonders of the returns of what real estate can offer. But this podcast is called Property People. You are obviously a successful property person. So what characteristics and what traits do you think are important for somebody to have to be a successful property person?
Well, I think you need to have honesty, integrity. You've got to have the hard work. You don't be scared to put the time in. So, and I know we're looking at social media. I see some people saying, look, I was working in Tesco's 2 years ago. Now I'm flying on a private jet and so on. Don't let that distract you, because realistically, that's probably not true in the first place. And, most of them are selling mentorship or asking for investor finance. If you're doing so well, why are you asking for investor finance and so on? So I think it's easy to get distracted. Just ensure that you stay in your lane. If it's something that you're passionate about, just keep working at it and you will be successful. Property for us was a passion. Both myself and Sanjay weren't doing it full time. Actually, probably took 18 years, I think, before I quit my job and went, full time. But we were still running it as a full-time business. We're just leveraging off the contractors and Sanjay's free time from being in his family business to build this up. So, just put that hard work in, it will come.
Absolutely. And hopefully we'll get Sanjay as well to come and share his story. It'd be great to meet him as well.
Definitely, it will be.
And the final question is, if people want to reach out to you and connect with you, what's the best platform?
So we're the most active on Instagram, so Savoys Properties. We're also active on LinkedIn, again, Savoys Properties. And we've also gone on to TikTok now. So we've got one of the guys that looks after that account. And again, that's Savoys Properties on TikTok.
Very good. Well, it's been an absolute pleasure. The pleasure's been all mine. I really hope that you'd come back and share more of the journey of what you're doing in building your businesses years to come. But also we'll be doing some roundtable talks as well, and hopefully you can be part.
Yeah, I'd love to. Thank you so much for having me. Really enjoyed it.
Cheers.